Good morning. Welcome everybody to today's topic about profit margins. This is a question that I get pretty often. Just what is a profit margin for baking business? How can I use this in my pricing? How is it going to affect me, etc. And I think there's actually something happening in the baking industry when it comes to profit margins that I want to bring up today that I think is going to be really important for you to hear. So let's get to that in just one moment. If we have never met before, welcome. I'm Melissa Fryer. I am the owner, the CEO, the main mentor at Build a Better Bakery. So if you've ever been to the website, you can see that we focus on mentoring bakers all across the world in different formats like weekly coaching, private calls, courses, documents that you can download, things like that. I'm really just here to help you. So what I do is I specialize in focusing about 17 years worth of baking industry experience, both cottage and commercial situations, into the content that I share here and on YouTube and on our website and everywhere that we are. And this is to help you master that stress-reducing control. We need to get stress-reducing control in place to make sure that you can run your business as an entrepreneur and feel really confident in what you're doing. We need to also build genuine joy for this business because it is going to take time and energy and money, and I want you to feel good about it as you're working on it. And then lastly, focusing on a sustainable income. What does that look like? How do you figure out how to do that? We just want to make sure you're not paying to do this. We want to make sure that as you're selling your product, everything is coming in and out correctly. And this is all just to make sure that you have fun with your baking business and it ends up being a really good experience for you. And I'm here for you, baker to baker. I've done it. I've been there. I'm really just here to share what I've learned with you. Today, we're talking all about that concept of a profit margin and how this is going to relate to your income as a baker. So go ahead and throw up your hashtag replay if you're viewing this on the replay, either here or on YouTube or wherever you're viewing the information. Here at Build a Better Bakery, the theme for August for these Thursday sessions is explaining profit concepts. So today, yes, we are going to be focusing on the profit margin. But the nice thing about what we're doing on the Thursday sessions here in the group is that they're coupling really nicely with our monthly workshops for the quarter. We're going to be talking about profit and pricing, and a lot of the information, the bonuses, discounts, anything that we're giving inside of the workshop is going to connect to something pricing. So it's going to help you figure out what's going on with your business pricing and how to get it to that profitable stage that you want it to be at. You can check all of that out at our website. That's buildabetterbakerynow.com. Okay, and then if you are here live, go ahead and throw up your hashtag live. The reason I do these lives is because I want to be here in person just for a few minutes every week to make sure that those people who want to talk to me or who have questions about the topic can get a little bit of time to do that, especially if you can't set up a private call or don't want to or whatever. That's why I'm here live for a few minutes every week. To stay in the know about these lives, you can check the events in the group. I usually post at the beginning of the month what we're going to be talking about every week. You can also send a friend request to Melissa Fryer, that's me, on the Facebook platform. Once I accept that, you'll be able to receive invites to any new events that I make. You can also hang out on the email list for direct replay links and other resource links. Those links usually come out later. They don't come out right after this goes live, so you'll definitely get them. They just won't be the same day. And then you can also subscribe to our free YouTube channel. Essentially, like the group here, everything in it is free, and what it is it's kind of like a replay on demand situation for videos. It's just easier to log and look through the videos there. So I think that's a good place to be as well. I go live every Thursday at 9 a.m. Mountain Time, right now for the moment. And that goes live in the Bakery Business School group on Facebook. And I want to make sure you're getting new, fresh content every week that's going to help support your journey. But really remember to head over to YouTube and get on there as well, because I don't know if the Facebook group is going to be here long term. So those are two places to go. Okay, let me double check. Okay, I'm just seeing if there's comments. There aren't any questions yet. So if you have questions about profit margins, if you have questions about how this is going to relate to you, you want to know something about it, go ahead and put it in the comments section so that we can look at that before we get off, because this is not going to be a super long video. So make sure you get your questions up there now. We're going to hop right in with what is the definition of a profit margin. And what I want to do is get kind of technical with you, give you some examples, and then I want to simplify a bit with just a quick example of how I would work a profit margin or something similar in my business. Okay, So a profit margin is the amount by which revenue from sales, the money that you're bringing in, exceeds the cost in your business. So how much money on top of what you're spending do you have left? Or how much money do you have left after all the bills and everything is paid for in your business? Another way to say this is a common measure of the degree to which a company or particular business activity makes money. So you can break this down to be, profit margin for a certain product. It doesn't have to be your entire business. So you can kind of use this in a couple different areas. Usually, again, expressed as a percentage, as most business numericals are going to be to help you understand the profitability of certain parts of your business. Rather than looking at the dollars, you're really looking at the profit margin. And it can represent the portion of a company's sales revenue that the company gets to keep as profit. So keep that in mind. We're going to differentiate that in a few minutes because I feel like the baking business, especially solopreneurs and people who are working alone, do something a little different with profit margins that I want to bring up. But again, it's really kind of what's left over after all of the costs have been paid for in the business. Now, profit margins are used by lenders. So if you're looking to get a loan, investors, people who are trying to put money into your business to help grow your business and usually getting a kickback from that. And then just the businesses themselves to determine a company's financial health. Now, do you have to have a huge profit margin to be a healthy company? No, but that helps someone who's trying to lend you money essentially know what's really going on behind the doors. It can also lead you to know how well something is being run. So if you're looking to invest in something, looking at their profit margin is a good place to start. And then also determining a growth potential. So if the profit margin's a little lower, you might have more growth potential in the future for that business. Profit margins typically vary by industry. So when you hear certain numbers being thrown out, if you're doing some research, make sure you're looking at what industry you're looking at because they're also very different and they all have very different costs and also pricing ceilings, how much will people pay, etc. Everything's different. So every industry is going to have some different numbers. And I did want to bring up that the restaurant and food business in general industry usually has a lower profit margin overall. This isn't one of those high profit industries because what we're doing is we're having to contend with a variety of costs that other businesses might not have to deal with, including ingredients. I think we can all agree that the fluctuation of pricing of ingredients can be intense. We have to deal with labor issues, so it's a laborious industry. We have to put a lot of time and money usually into what we're making. The overhead may or may not be high depending on if you're working from home or working at a commercial kitchen. There could be a large variation in that as well. And then any kind of extra rents that you might be paying. So paying for that space, that kind of thing. A lower profit margin does not necessarily mean that a company isn't making money. It's just in a different bracket. And so on the contrary to this, most of these businesses who have a lower profit margin, food and restaurant is not the only one, but those who have the lower profit margin usually compensate with higher volume of customers, a variation of products and materials that are used. So there's, could be higher end products and lower end products, or there are certain bakeries and other food restaurant establishments that are selling higher end products to kind of push that profit margin up a little higher. That's personally what I do. So 3 main types of profit that I want to talk to you about today so that you can, when you see these words, you've heard them before and you can kind of understand more of what they're talking about. These would be usually seen on an income statement. So if you're getting new paperwork for your business, you're trying to fill something out, you might see these. The first one I want to talk about is called gross profit. So this is when a company is reporting its sales revenue, so everything that they're bringing in, and then accounting for the direct cost of producing its products or services, sometimes called COGS, which we'll talk about next week. This may or may not include your pay. This usually will include a payroll for other employees, but some business owners, and we'll talk about this a little bit later, but some business owners for some reason are not including their salary or their pay in the gross profit, or I mean in the cost of the business. So, just keep that in mind. The gross profit is kind of like without really doing a ton of calculation. How much does it cost to make the thing? How much are we bringing in, and what's left over? That's the gross profit. The second one is called an operating profit, which you may or may not use this one. It's accounting for the indirect costs, which personally I would have in the gross product category for the costs in the deduction. But this could be something like maintaining the company headquarters, which I would consider to be overhead, advertising, research and development, stuff like that. I would have put that in the first category. But if you're separating them, sometimes it's called an operating profit when you take out those things to operate the business as a second deduction from the revenue amount, right? Taking more money away from what you're making. And then the last one I want to talk about is net profit. So this is kind of the bottom line. This is after you've done all of your deducting, and this is accounting for taxes and anything else that's kind of floating around that you're going to have to pay for. So this could be called net profit. This could be called net income, whatever you want to call it. Again, just the bottom line. So profit margins can be used across different locations of franchises. So if you have multiple locations for maybe your bakery or another business, or you've seen those types of things like a crumble cookie or something similar, that can determine the health of each location. So that could help you figure out, my West Side location isn't really doing that well via the profit margin. Even though they're making more, they're spending more because the rent is more expensive, etc. So you can kind of weigh with these percentages which places are bringing in the most income or just doing better financially because maybe they have lower costs, etc. So that can be used to help determine the location's health if you have more than one location. And it can be also used to get loans. That's important too. So if you're looking to expand, having an idea of what a profit margin is and running numbers a few times to get used to it is going to be important. And of course, investors are going to be interested in this. So if you have people asking, hey, can I invest in your business? Usually what they're wanting is they're wanting a return on the profit margin, or they're wanting a return on the profits that the business is making. So just know that they're usually wanting something out of that. If they want to invest in you, likely they're going to want to see these kinds of numbers. So having that on hand and just knowing what I'm talking about right now is going to be important. So now that we know a bit more about profit margins, we need to discuss how you will calculate them and what they will mean to you. Again, your numbers are your numbers. Unless we're working one-on-one together in a private call or something similar, I'm never going to know what you're looking at for your numbers. So just keep in mind, this is very generalized. And if you need one-on-one help, we have the Pricing for Profit course. We have the workshops coming up. And then additionally, any kind of like private mentorship via Zoom or phone or something like that. I can help you one-on-one with that. Okay. Now let's see. Okay, so knowing how to calculate this. For a person who works alone, I wanted to bring this up because I feel like people often talk about profit margin when I'm in like baking groups, and I don't know that people are actually talking about the same thing. So I just want to clear this up. For a person who works alone, I've noticed that some bakers account for their pay, their own personal pay, in the cost of making the items, which is what I do. While others rely on what's left after bills are paid for their take-home money. So I think what they're doing is they're actually using their profit margin as a way to determine what they're going to make on this sale. That's very volatile, and we'll talk a little bit about that. But I think that's the difference of what's happening is one person saying profit margin, but they're going home with a paycheck, and the profit margin is the business's money, and it's the extra money that's coming in on top of all of that. And another person is saying profit margin, but what they really mean is what they're getting paid. And I feel like those are just very different things. So the difference is that the one person who's including their pay in the COGS, in the cost of goods sold, who is including their labor as part of their labor and time and their salary as part of creating the products, whatever's left as the profit margin or whatever you're charging as the profit margin is then like the business's pay. It's not, you can take it, but it's because you're the owner, right? But it's not compensating you. You've already been compensated. You've already decided, what am I going to make from this? And you're making that. And then anything else on top of that is something else. And then the other person is relying on that profit margin to make up their pay entirely. So saying, oh, I make 20% on each sale, or I make 30% on each sale, or whatever it is. But for the person who's including their pay and or the pay of others, which you definitely will be, so if you have payroll, whatever it is, that's going to be included in the costs as you're working up this margin. That's getting subtracted in the first equation. So so whatever's left at the end, everything else is already included in that. So it's above and beyond. I just want to really hit that home. It's above and beyond getting paid, okay, if you're doing it that way. And it's a much safer bet to do it that way. I think after the first few times you look at this, you'll understand why. If you're pricing your products based on the profit margin without calculating any money going to you, you're paying yourself with your profit margin. And I want you to just be careful with this one because I've even seen commercial bakeries do this. I'm not exactly sure why, but I want you to be careful because baking can be very volatile. The pricing of things can be very volatile. So I just want you to be super, super careful here. If you pay yourself as part of the cost of goods, you know that any additional profit can be saved or spent elsewhere. So you're not relying on that. It could even be paid out as a bonus, like every quarter or at the end of the year, whatever it is. As I mentioned, I personally prefer really kind of like an hourly rate built into the cost of the goods. And I'll do a little example at the end so you can kind of see what I'm talking about. And with a small profit percentage. So I'm not ignoring the profit margin, but I'm not relying on that for my money. And I save that for business use. So it is the business's money. If an investor came in, I would have that money. So I'm not taking it out as payment. Does that make sense? So it really is part of the business. And if an investor came in and said, hey, I'll split, your profit margin down the middle and I'll do all your advertising, or I will, I'll give you like $1 million, just whatever it is, right? Like, then you can use that money as leverage. And for me, in the pricing for profit course, if you've ever been in there or if you've seen me talk about this formula, the word has changed a little bit over time, but essentially I call it a business profit percentage. I'm not calling it a profit margin. It's just a business profit percentage that I'm adding on. So it's not exactly a profit margin, but it's very close to it in one way or another. Okay, so as an example of how I would calculate the cost of a product, this is very basic. If you want the nitty gritty, that's in the course. You can also ask me questions if you need to. Okay, so I run the cost of goods. Overhead, depreciation, labor costs for a bake session, not just one little thing, a bake session of what it would actually be like to create the products and then divide out into one single product. So this could be like, 48 cupcakes, or this could be a big pan of brownies or whatever. Then after I figured out what is each individual thing in the group, how much is it going to cost me to do this, then I add the business profit percentage at the end and then any applicable taxes to come to a final price. I usually don't charge tax because every place that I've lived doesn't collect tax on bakery products the way that I'm doing it. So that hasn't been an issue. So let's say that each cupcake contains about 55 cents of materials. Overhead is about 20 cents. Depreciation is about 10 cents. Labor cost is about $1. Okay. Total, and this is all divided out from the whole bake session. Total invested in making the cupcake is about $1.85. Business profit percentage, and I'm just going to put 10% here. 10 to 50% is pretty common, anywhere in there depending on where you live and how much you can charge. Let's say it's 10%, and I'm not adding any taxes right now because I may or may not be charging that. So the final customer price for the cupcake would be the $1.85 plus the 10%. So it's going to be around $2 for the cupcake. For each sale, after that $2 has been brought in as revenue, I can divvy out the money to cover all of the bills that I've calculated to pay myself as well as save for the business using this type of profit margin attached to the end of each product price. Another example is when I teach classes. This is going to be a little different. I price my classes so that I need just 6 people to attend to break even with all the bills paid and my salary. So I don't hold a class unless 6 people are attending, because at 6 people, everything is paid for. I'm getting my money for my time. but I'm not making anything else. There's no profit margin. There's nothing else. It's literally just everything's being paid for. But in these classes, some of these classes, I can take up to 30 people. Okay, so everything that I'm bringing in for those 30 people is not like a profit margin or all revenue, because there's cost involved with each person for sure. But what I'm doing is I'm layering on income for my time. I'm still only spending 5 or 6 hours total, but all of these people are helping pay me more and more and more for each hour because there are more people in attendance. So if I have 6 people sign up, my profit margin would be essentially 0 because I'm really just paying for everything and that's it. But remember, I include my income at the beginning, so I am getting paid for that time, even though the profit margin is technically 0. But if I booked 30 people or anybody over 6 people, my profit margin would be slowly rising because I'm making more and more and higher over that break-even point of just getting paid my base amount per hour. This is where I've talked to, in plenty of classes and videos before, but this is where teaching classes, so you're serving more people with less time, bulk baking, wholesale, any place where you can kind of like make more money with your hours based on how you're selling your product or how you're presenting your product. That's really where you can start increasing those profit margins because you are able to bring in the dollars for, a set amount of time. How much can you do with that, that small amount of time? Okay, not seeing any comments, no worries. If you have questions, I know profit margin can sometimes be confusing, so just let me know. You can also post in the group. You can send me a message if you want to. You can set up a phone call with me. We can talk about it. Okay, let's do a recap real quick. Profit margin is normally used as a way to show the health of a business by looking at the revenue generated. So what are you bringing in above and beyond the cost to run the business? That's literally the most simple way to say this. In baking, that could be before or after you pay yourself. Remember, I think people are doing something a little different here with this. And it seems that many bakers do not include their salary or their hourly pay as part of the cost to make the goods. So I would switch that if you're not doing that already. If you are including your salary, any profit margin on top should be essentially like bill-free and left to be spent or saved as needed for the business, but not to pay your base salary. So you should already be making what you need to make, and that would be anything on top of that. If you're using a profit margin to pay yourself, your pay will be determined by the fluctuation of pricing of materials, the fluctuation of your bills, plus the volume of your sales. So there's really, it's very volatile. It would be very difficult to determine how much you're going to go home with if you're relying on that. I would highly suggest making sure you're paying yourself that reliable rate first rather than relying on the profit margin to become your pay. Pricing can be a bit much. I totally get it. This is literally like one drop in the bucket of everything that pricing involves. So we're providing some extra help this quarter. And even some of you that have been baking for a really long time, that have a lot of experience with this, you might start finding yourself in a situation where you're just not making enough, or you don't understand why the pricing isn't working, or you feel like you're missing something. I totally get it. I mean, it happens to all of us. And when I moved from just baking from in a commercial setting to baking at home, complete shock. When I went from baking at home to teaching classes, complete shock. When I went from baking and teaching to online, enormous shock. There's just lots to learn. So I'm here to help you. If you missed it at the beginning of this session, I mentioned that we're focusing on pricing. Pricing in general, just some interesting topics about pricing in our workshops over the next few months. We recently discussed the 5 pricing myths that steal your income as a baker. This is super important if you know that something's wrong, if you know that you likely aren't really coming at this with math, you're likely coming at this with emotion. That's not going to build a long-term business. It just won't. That's just not how it works. Math has to be involved in your pricing, and you have to understand all the aspects of it. So if you know something's wrong, if you know you really haven't put enough time into this to understand pricing, this would be a really good one for you. It is now available via replay. So just because you missed it live doesn't mean you still can't see it. But what you'll do is you'll register for a Q3 bundle. It has 3 workshops in it. It does come at a discount, so you get all 3 for a little bit less. And there's 2 more live workshops left in the quarter. So you're going to get 2 lives plus the replays and the replay from last month. if you register now. We are covering 5 pricing strategies that improve profit in August. You're going to get 5 ways to raise your profit right away in August this month. And then we're going to do pricing psychology to increase sales in September, which is a really fun topic. I think you're going to love it. And you're going to be able to use this information right away. So it's going to be really good. Both super fun. Each live session, if you sign up before the live session takes place, you're going to get a personalized private mentorship slot. So I'll send it to you. You sign up. It's free. It's part of just talking about the workshop. And, you know, if you want to talk about something related to the topic, we can talk about it. And then you also get a half off code for the Pricing for Profit course. So the course itself, super helpful, great reviews, thousands of sales. I think you're going to love it. We also do, you know, there's like a money back guarantee. I don't think you'll need it. I've never had to use it, but it is there just in case because I want to make sure you feel supported in your choice. And you can move right into profitable pricing with all this really great information. Okay, hope this has been helpful for you today. I know profit margins can be kind of weird. That's all for the profit margin. We're going to come back next Thursday with another breakdown of a common profit concept, which is what is COGS, so cost of goods sold. It's what we've talked about today, but I want to break it down a little further because it's an acronym and people kind of throw it around, and I want to make sure you know what it is. Hope you all have the best day. I'll see you next week, and I hope to see you in maybe one of our baker-focused workshops. There's one coming up soon in August, or maybe some coaching soon if you'd like that. I hope you all have the best day, and I'll talk to you later. Bye.